Not sure what you're allowed to deduct as a business expense on your shop's taxes? What can you write off and what would be a red flag? We'll figure it out now. Hey there, I'm Janet LeBlanc from Paper and Spark, and I help makers and artists like you start and scale online shops so that you can achieve your entrepreneurial dreams with ease and hit your financial goals. By the end of this video, you'll understand what types of expenses are considered a tax deduction for your business, along with what you shouldn't write off so you don't get in any trouble with the powers that be. Make sure you'll stick around and I'll share an exclusive discount code for my bookkeeping system that will help you easily capture all your deductible business expenses so you don't leave any money on the table at tax time. As you update your shop's bookkeeping system every month, or let's be real here, maybe you're doing it once a year and catching up at tax time or the end of the year when you're doing your business income taxes, you may find yourself asking this question: what expenses am I really allowed to deduct? What expenses should I avoid claiming as write-offs because they could be a red flag to the government? What I'm talking about here today pertains to deductible expenses for income tax purposes here in the US. Let's get into the details. The best place to get started with this topic is straight from the horse's mouth, and that means the actual IRS, the Internal Revenue Service. I recommend getting started by looking at Publication 535. I'll link it in the description of the video if you want to open it and have some light bedtime reading for later. It'll put you straight to sleep, I promise. So per the IRS, to be deductible, a business expense must be both ordinary and necessary. An ordinary expense is one that is common and accepted in your industry, and a necessary expense is one that is helpful and appropriate for your trade or business. An expense does not have to be indispensable to be considered necessary. So in general, you should only be writing off things for your e-commerce shop that are considered both ordinary and necessary for running an e-commerce shop. We want to keep it within the bounds of reason. We want to set up our books and our tax situation to be audit proof, all right? In the unlikely event that you are ever audited, do you feel comfortable defending that expense, that write-off, that tax deduction as ordinary and necessary for your business? Examples of ordinary and necessary business expenses for an e-commerce shop include things like website fees, credit card processing fees, advertising, marketing materials, shipping expenses, things that you pay for your postage, your labels, your packaging materials, contract labor, if you ever outsource work, whether virtually or in person, anything that you hire help with for your business, including payroll or just a regular contractor, education, training, memberships, if it's helping you to build an existing skill or further your current business activity, travel expenses related to your business, not personal travel, rent, storage fees, office expenses, any expenses you pay to sell at local markets, in-person events, things for your booth, your setup, your supplies, anything related to photography expenses. So that could be the actual equipment, or it could be light boxes, props, things that you use to stage your photos. Those are all good examples of ordinary and necessary business expenses for an e-commerce shop. Let's talk about some things that usually are not considered ordinary and necessary for your business. These are more the gray areas that I get more questions about because it's less likely for you to find clear-cut answers to these things for your specific situation. So here are some of the questions that I get asked when it comes to whether you can deduct particular things. Can I deduct the cost of personal care stuff like getting my nails done, getting my hair cut, or getting a massage? Generally, no. Although this has become popular with bloggers and influencers in recent years, it's really hard to defend these types of expenses as ordinary and necessary for your business. It's possible you could deduct a hair or a makeup appointment on the morning of like a photo shoot for your brand, but outside of that, I personally wouldn't risk it. A good rule of thumb or question to keep in mind at all times is, do you feel comfortable defending this expense to an auditor? A lot will depend on your risk tolerance and your tax pro's risk tolerance if you have one. Can I deduct the cost of my clothes, my shoes, my personal accessories? The same answer really applies. Unless you feel confident defending these purchases as ordinary and necessary for your business, no. If you ever use or wear any of these items in your personal life outside of your business stuff, I definitely wouldn't risk it. The deduction is just not worth the headache in my opinion. Can you deduct something that you use for both business and personal use? It depends, possibly, but if you do, you would only want to deduct the business portion of that expense. So let's say, for example, we buy a glow forge. We might use it for a business purpose, but also for personal hobbies and fun as well. You can only deduct the business portion of the cost of the glow forge. Anytime you have a situation like this, you need a way of figuring out your business use versus your personal use. You want to come up with a percentage of how much is actually business use. I'd suggest keeping a log of how much time you spend on both types of projects for a month or two so that you can get an average. You really want that sort of documentation. In the event you're ever audited, you can prove to the auditor how you determined your business use percentage. And with the glow forge, I should probably add that this is likely considered an asset, a purchase of an asset, not just an expense. That means that the cost would be depreciated over several years on my tax return rather than deducted all in the year of purchase. Can I deduct my home office related expenses? Yes, if you meet certain requirements, mainly that the area of your house must be used exclusively and regularly for your business. If you meet these requirements, you can take the deduction one of two ways. One is either based on the simplified method, which means you multiply $5 by your total home office square footage, or you can take a percentage of certain of your actual home expenses, things like utilities, mortgage interest, insurance, and more. For more information on the home office deduction, make sure you check out publication 587 from the IRS. Can I deduct my mileage? The same sort of concepts we've been talking about apply. If you use your personal car for business stuff, you can potentially deduct your mileage related to your business use of your car. You can deduct either your actual car expenses, which include depreciation or lease payments, gas, oil changes, tires, repairs, tune-ups, insurance, registration fees, or instead of that method, you may be able to take the standard mileage rate instead to figure your deduction. For 2023, the standard mileage rate is 65.5 cents per mile. Again, you want to make sure that you have a really nice paper trail if you plan to claim the mileage deduction. You want to keep a log of your miles driven, the date, the business purpose in your car so that you can easily back that up with proof of the business purpose of those miles. Can I deduct something from my business that I paid for with my personal funds? Usually, yes. The IRS doesn't really care about the source of the payments, the source of how you bought stuff for your business. Lots of micro business owners are funding their business purchases from their personal bank account, at least in the beginning. That's normal. Those purchases can still be claimed by your business as a deduction. Ideally, you do want the expense or the bill or the account or whatever to be in your name or have your name on it. And finally, can I deduct the amounts I pay myself? If you are a sole proprietor or a single member LLC taxed as a sole proprietor, then the amounts that you pay yourself are not an expense. They're not something that you can deduct at tax time. They aren't considered an expense in your bookkeeping system for your business. They're actually considered owner draws, so think of them like transfers. Your sole prop business is taxed on its net income, which is just your sales minus your expenses, and your owner draws are not taken out of that net income. They're part of it. They're not considered expenses, so we don't deduct those amounts at tax time or on your books. If you have questions about any of these things, let me know in the comments. I also encourage you to subscribe to my channel here so you can always stay up to date on bookkeeping and tax requirements for your shop. If you're looking for an easy way to track all of these types of expenses I've mentioned with step-by-step videos and written instructions, make sure you check out a Paper and Spark seller spreadsheet. They will help you track all these things easily and more so you don't lose out on any of those important tax deductions. Plus, they're designed especially for e-commerce sellers in mind. Since debuting my spreadsheets back in 2015, we've had tens of thousands of customers make the switch to Paper and Spark and hundreds of 5-star reviews. As a thanks for watching this video, you can use the link in the description to opt in for an exclusive discount code on any spreadsheet over at paperandspark.com/shop. If you want to learn more about how these Paper and Spark seller spreadsheets work and how they can simplify your business bookkeeping, watch the no-brainer bookkeeping solution for e-commerce sellers next.